Hey everybody, JC Parets here, and I am joined by my esteemed colleague, Mr. Sean McLaughlin. Shawnee baby, how are you?
What's happening, JC?
Oh, just a nice little Wednesday. We had our team meeting this morning, and we talk about all things markets, talk about what's moving and shaking, and the bottom line is this. If there's any trade that we've been putting on since the first quarter when really market internals peaked that has consistently worked, it's when we're selling premium. So you're on the meeting today and I'm like, Shawnee, where are we selling premium? And you're like, well, where do you want to sell premium?
That's a very good rendition of exactly how that conversation started.
So you liked that Boston Scientific chart, right? So like I'm talking about selling premium. You're like, hey, baby, look at this guy right here.
Well, let's back up a second. First of all, we were talking about where's the strength in the market right now? And you and Straza and the guys on the team were talking about how in the medical device spaces and the medical tech space that there was a lot of strength going on, a lot of outperformance. So we were like, all right, well, what are some names here? What are the best names to get into? And Boston Scientific was one that we talked about. Abbott Labs, there were a few others, few smaller ones. And we looked through the charts, and I think some of the guys liked Abbott a little better, but I liked this BSX chart, man. I mean, look at this. I mean, the chart you're showing on the screen that you got there is a monthly chart, monthly candles going back 20 years. I mean, look at that base. And, I mentioned in the call with you that, I reminded you of one of your favorite sayings, the bigger the base, the higher in space, right? So look at this chart. I mean, if this thing can break out, wow, we could have a big mover here.
One of the things I like about it when we're talking about where the strength is, it hasn't been in industrials, hasn't been in materials, has not been in financials. Where has the strength been? It's been in healthcare for one, and particularly in the medical equipment, right? Like the devices and stuff, and Boston Scientific just running right up against that level. And then when you zoom in, right, that 46, man, if they can get going, they can really rip. And again, the space is already showing relative strength, not just healthcare, but within healthcare, the tech of healthcare, Boston Scientific is right there. So I'm like, all right, how's volatility? And you're like, at first you're like, oh, it's kind of cheap, but then you change your mind. You're like, and second thought, it's actually not that cheap. So
yeah. At first glance, I looked at the IV and the options, and it was indicating that it might be a little bit lower. But in closer inspection, I looked and I saw, well, there's a lot of extra premium being priced into the upside calls, which we've talked about in the past, JC. That's been kind of a feature of the market this year. We've seen a lot of upside volatility, which is a little bit unusual in normal markets. And BSX was showing a little of that too. So I was like, I'm going to back off of just doing a straight call here.
And what did I say?
And I don't know. I forget what you said.
I said put on the riskies. Let's go, baby. Go big or go home. Risk reversal. Sell those puts.
This is the second week in a row you were bullish on a risk reversal, and I had to talk you off the ledge there. But I know that's your pet strategy of the week. That's
if
cool.
You're bullish, put on the risky. But in this case, yeah, no, I get why you don't want to do that. It makes me
it didn't make sense because there was more premium in the calls than we were getting in the corresponding puts. So that's why the risk reversal didn't really make a whole lot of sense. So what I decided to do after some more deliberation is let's do a calendar spread, and here's why. If BSX does break out, I don't think, my hunch is that it's not going to be a screamer. It's not going to just rip to $50 in 2 weeks. I think it's going to kind of take its time. It's going to take a few weeks. I mean, look, if it rips to 50, great, but I think it'll take its time. And this little base that we've got that's been kind of developing over the past couple of months, it might still have a little bit more time to work itself out. So I said, let's do a calendar spread, and when at least we could buy the March calls, but take a little bit of the bite out of those by selling some November calls against it. And the thinking is that BSX probably won't get to 50 before November expiration, but if it does, and that's okay if it does, we're going to have a profitable trade on our hands, and we'll just close the whole spread now when it gets up to 50, and we'll book the profit. But really, the real goal here, JC, is my hope is we're going to start trading up. We're going to break out, but we're not going to quite get to 50 until November. Those November short calls will expire away worthless. And then we got long calls all the way to March with theoretically unlimited upside. And that's where we can really get going in this trade.
No, I like how you treat this like a chess game, Sean. You're already thinking a few steps ahead, which
You have to.
in the options market, I'm just not at your level. So I truly appreciate like how many steps ahead you're thinking. So just to be clear, this is a Boston Scientific BSX November March 50 strike call calendar spread for $1.15 debit or cheaper. So just to be clear, what does that mean? That we're going to be long the March 50 calls and short an equal amount of the November 50 calls for a net debit. And that represents the most we can lose on the trade. I like how you put it, if it short circuits on us. Now let's talk risk management. Let's say we've seen the top in Boston Scientific and everything's about to fall apart. So what are we thinking here?
Okay, well, first off, if everything is about to fall apart here, at least we know that the most we can lose is that debit we paid. So $1.15 is what we paid to get in. That's the most we can lose, in the worst case scenario. So of course, we size our position appropriately. We don't want to risk too much of our portfolio on this trade, right? Because if we do lose 100%, that would suck, but let's keep it manageable. So that's the first piece of risk management. The second piece is, well, where on the chart do we feel like we're wrong? Now, you and I had a little bit of a disagreement on this, a friendly disagreement. You were thinking that 41 was the level that we need to watch because that was the low that was put in this summer. And while that's a reasonable low to pay attention to, I'm getting a little bit more aggressive and leaning against the low that happened in August, right around 42. I mean, we're probably just splitting hairs, JC, but for me, if BSX closes below 42, that's where I'm just going to close the trade down, the entire spread or whatever's left of the spread, and minimize the loss, salvage whatever I can. That's the risk management piece. Now, if BSX goes up and does what we think it's going to do, then we've got two scenarios that we need to be mindful of. If BSX does pop higher at a much faster rate than we expect. Again, it's a first-class problem. That's a good problem to have. But if we get up above $50 before November expiration, we're going to take the trade off, take our profit, move along. And I mentioned this before. If we don't get to 50 by November and those short calls expire, then great. So we're going to hold the long March calls. We're going to attempt to hold them all the way into March. And if we ever get an opportunity to sell half of our March long calls at 230, which would represent double what we paid to get into the whole trade, we will do that, taking our original risk off the table. And then we've got a free ride with potentially unlimited gain on deck for us. And that's a good position to be in. And those are the positions I love to be in.
There's no doubt about it, Sean. We have well-defined risk already built on the trade because we can't lose more than we put in. So already, we know the most we could lose no matter what. But then in addition to that, there are risk management levels where we can actually minimize the risk even further. And then to the upside, we have a couple of different scenarios depending on how fast Boston Scientific starts to rip. If it doesn't do it as fast, that actually turns out to be even better. So I love the trade. Once again, guys, Boston Scientific, November, March 50 strike call calendar spread for $1.15. That means we're going to be long the March 50 calls and short an equal amount of the November 50 calls for a net debit. That could be the most I can lose. So I really appreciate it, Sean. Any final words of wisdom here for this trade?
Nope, but go Bills.
Nobody cares about the Buffalo Bills. Like, that's not a thing, Sean. Nobody cares.
It's not a thing, but you can go to every major city in America and find 3 Buffalo Bills bars. I still haven't found one Miami Dolphins bar.
Stop it.
Still
the
looking.
Dolphins are like one of
Still
the most
looking.
widely followed teams in the country.
I'm still looking. I don't see them anywhere.
Listen, you're going to be rooting for the Dolphins this weekend to beat the Patriots, though, right?
We can agree on that, sure.
All right. Boom. Go Dolphins.